Well, China's trade figures are another sign its economy is on the mend. Foreign trade volume rose slightly, with December seeing a higher than expected increase. CGTN's Yan Liang spoke with an economist about what that means for China in 2024.
A bright spot in China's trade numbers for 2023. Exports of the so-called new three products, electric vehicles, lithium-ion batteries, and solar panels, rose by nearly 30% year-on-year to pass 1 trillion yuan, or about $140 billion. Official data also shows that electromechanical products made up nearly 60% of total exports.
There's an upgrade in the composition of exports, and also because China is moving up the supply chain, more items can be manufactured through more automated production process, and that means the scale economy will be more prominent.
The government says China is diversifying its trade partners, with a higher proportion of exports going to Belt and Road partner countries. And the number of China's free trade zones increased in 2023, as did their trade volume. Wang says in 2024, the biggest opportunity will continue to focus on the new energy supply chain and green products. And the biggest market for many Chinese companies could still be Europe.
For European countries, they have a real constraint on reaching their climate change goals. So they need to replace much of their cars running on the road with new energy vehicles. And they also need to use a lot more solar panels than before. But one downside risk is actually a potential trade war or trade tension between China and the European countries, since the Chinese companies have become so competitive.
Private enterprises could be another bright spot for China. Official data shows the sector accounted for more than 50% of total foreign trade volume in 2023, playing an increasingly prominent role. Gang, CGTN, Beijing.
Okay, let's dive more into China's economy, where it is going, where it's been. For that, we're joined by Yan Liang. She is a professor of economics at Willamette University. Always a pleasure to see you. Thanks very much for joining us here on this day. I kind of want to take a look at the report we just heard, and also the news about imports, also exports in China. It's at best a mixed bag. China is still continuing to struggle.
Right. Good to talk to you, Sean. I think you're right. So what we see from December is that the export starts to pick up again. But the whole overall year for 2023, export has contracted by 4.6%. But this is against the drawback of the global trade has contracted by 5%. Trading goods has reduced by $2 trillion US dollars, according to the United Nations. So I think what that means is that there has been really weak global demand, largely because of inflation and the monetary tightening in the United States and also in European countries. On top of that, there's the geopolitical tension. There are also rising trade restrictions. And so all of these, I think, drag down on the global trade, including China's trade. But again, as I mentioned, I think seeing December's number that tells us we'll probably see brighter trade performance in 2024 this year because the rate hiking cycle has ended and the Fed and the ECB are probably going to start cutting rates. And also we're seeing, the tech sort of cycle has bottomed out. So there might be increasing demand for electronics and some other products that China is very competitive at. That said, of course, there are also headwinds when it comes to, continuous trade restrictions, potential trade war, as the economists talked about, as well as, what's happening at Red Sea right now that disrupts shipments.
I want to talk about a couple of things that are very positive right now. China's car market, its automobile industry doing extremely well, and also moving into technology, chips. That is improving as well. Tell us about that and why that is going to be so important to China's bottom line moving forward.
Yeah, absolutely. This is crucial. I think, we should not just be looking at the total trade volume, but really looking at the So as Wang Dan just mentioned, and the reporter, right now China is really very competitive in producing automobiles. As a matter of fact, last year China has produced over 30 million cars, and its exports of automobiles had surged by 63.7%, overtaking Japan as the largest automobile exporters. And a lot of these exports of automobiles are, also EVs. So they're not only good in terms of, improving China's trade structure, but also really helping, the world with the green transitions. And you're right, a lot of these tech products, including the lithium-ion batteries and also solar panels, all these are going to, continue to grow. And so I think that really helps to both upgrade China's trade structure, but also help with the rest of the world to obtain, that kinds of green technology, green products.
And a couple of things that are sort of dragging on the economy as well. When I read about China's economy, one word comes up time and time again, that is deflation. Secondly, as I understand it, the U.S. is China's largest trade partner right now, and the desire for imports went down last year, exports to the United States. What are the concerns about that? And also the ongoing concern about the housing industry. We can't ignore that.
Right. I really like how you have this very balanced look at the economy. So you're totally right. There are many, headwinds, and so let's look at some of them. So one thing you're right. The U.S. demand has been contracting. I think largely, due to the Fed, tightening the rates, and consumer demand it's somehow tamed. They're also having a lot of sort of trade restrictions, and also the reshoring of supply chain. So all of these could affect China's exports to the United States. But that said, I think as the reporter mentioned, China is very actively also seeking for new partners, including countries in the Belt and Road. And let's not forget, China's exports to Russia has surged by 47%, last year. So I think the point is, as long as China continues to strengthen its own competitiveness, I think it will be able to find, international market. But that said, I think, what demand really needs to come from is from the domestic market. So you're right, there is the deflationary pressure, even though the overall CPI for the whole year is out by 0.2%. So we're not quite deflation just yet. But that weak demand suggests that we need more expensive fiscal policy to support both on the fiscal front and also in helping consumers creating more jobs and income. And last but not the least, I think the property sector, yes, continues to drag on the economy. We still see, negative 9.4% of investment growth in that sector this last year. But again, China has been dealing with this, saying, no, this is a sector that needs to be deleveraged and to be adjusted. And they're looking for new growth engines. And so that includes new technologies, green technologies, and green energies. And also the government has been, working on stabilizing the housing market, including shantytown revitalizations and social housing and so on and so forth, and infrastructure. So I think all of this will help to stabilize the market and, have the new engines of growth.
Yan Liang, that's why we love having you on. We ask the questions and you make it so easy to understand. Thank you so much for your insight.
Thank you, Sean. Have a good weekend.